Yo, YouTube. So this is the trade we took today. Another L. So it's 3 L's on the channel already. Yeah, I mean, it happens. You're not always gonna win. You're not always gonna lose. We're gonna get a win here shortly. Hopefully this week, maybe next week. Just depends how the market is. But I just wanted to go a little bit about my life. Not really about my life, just my trading journey. Because I don't think I've said it. But I've been trading for a little more than a year now. I started learning about Forex. I started with options, actually. I started with options. I had a $500 account. I blew it pretty quickly, like in 2 weeks when I first started. But yeah, I'm a freshman in college now. I started when I was a senior, like literally August, right when school started. That's when like I first started trading, around that time. And then that whole summer I just spent learning. And then I finally got the courage to open up an account, and I did, and I blew it pretty quickly. And ever since then, I've been paper trading for like almost 6 months. And then once I turned 18, I got my first I bought my first prop firm challenge. It was a 10K for my Forex funds. And if anyone knows, they their business got shut down. So literally right when I passed the funded account, they got shut down. So I made no money on that account. And then I took some time, paper traded a little bit, and then I moved to a 6K account with one-on-one funding and failed that one. And right now I'm on a 15K funded with same prop firm one-on-one funding, and we're in a little bit of drawdown. I think we're down 3%. I've had this account for a little less than a month now, I think. I bought it December 11th, somewhere around that area. But yeah, I've had it for almost a month now. And with one-on-one funding, you don't need, there's no time limit. So I'm not really too worried about that. But I mean, yeah, that's basically my little trading journey. I haven't been trading for too long. So like, I'm still really open to suggestions if anyone has any suggestions of what I could have done better and all that. And yeah, I'll basically go through the trade now. So on the daily for SPX, oh yeah, we were bullish, as you can see here. We swept previous all-time highs, and we've just been on price discovery the past few weeks. And if we scale down to the 4-hour, had this big imbalance here, and also equilibrium with these lows that did not get hit. So I can just take that off. On the hourly, I think, let's see, we had 2 liquidity zones, a liquidity void, some people call it. We had, boom, this liquidity down here. Also this liquidity down here that gets swept. And these highs that got created pre-market, and these highs. So I was basically looking for a sleeper liquidity or just an expansionary move up, and that's what we got. So as you can see, pre-market kind of yesterday, we swept these. You count these lows, these lows, these lows, these like equal lows, all got swept, and we had an expansionary move up, and we created this 1-hour fair value gap here that I was expecting price to bounce off of and continue higher. So boom, this 1-hour fair value gap here that we had a wick off of. So basically I scaled down to the 15-minute, and again I was just looking for this zone. We didn't really have anything until around 9:40. So if I scale down to the 5-minute, you can kind of see what I'm talking about. So right when market opened, we had this big, like, we were just accumulating for a while, as you can see here, just till like, what time was it? Around 10:15 is finally when we broke out of this range with this 5-minute candle. Basically gave me bullish confirmation. So if I scale down to the 1-minute, I found my entry point here. So boom, we had this push up, We broke structure once, came back down, broke structure again with this one. Here, I'll just show you with the line. So we broke here off of these lows, boom, broke. We created new higher lows, boom, here. We broke them. We created this little 1 minute fair value gap here. And basically this candle pushed into it, and we had another push out, and we entered with this candle, this blue candle. And this was sketchy for me, just because I definitely could have stayed off of this trade, but I decided to take it just because I really don't know. I just took it. But as you can see here, this black candle, this bearish candle, if you can see right there at the top, it shows you where it closed. So this one closed 4,859, and the high of this candle, the bottom of the fair value gap, is 4,859.1. So it basically closed below the fair value gap, but it was just by 1/10 of a cent, no? Or 10 cents. So that was basically super sketchy, but I saw it did break here, so I was just bullish on it. But boom, we came in, we pushed up a little bit, and then we just got demolished. I think the best thing that I could have done in this trade would have honestly been just to stay off, just because of this, because it did close below it by 10 cents. And if we would have saw that, I think we would have stayed off of it, because as you can see, we had this crazy dump here, and price is coming back up to my take profit, but it's way late into market. So I think that would have been the better thing to do, just sit on your hands, just because that was like such a sketchy close. It was like 10 cents. And maybe next time we'll learn and just like not take a trade just because of that. Like for fair value gaps, I need to start looking for fair value gaps like this. Here, I can remove all this. Hold on. What is wrong with this? Okay. For fair value gaps, I need to start looking for stuff like this. Like a full wick out, not just like a body close, like almost closed fully into the fair value gap. Because that's pretty much bearish, and I've noticed I've taken a trade like this before, like 3 or 4 trades, and 2 of them have played out, and now this is my 3rd one that hasn't played out. So I think it's time to, the odds are really against it, so I might just not take trades off of fair value gaps that the body is almost fully closed, like this one. Where is it? Like this one here. But yeah, that's basically it. And see.